Good weekend. Ira Epstein with your financial market wrap-up, and this is your weekend edition. And we are sitting here now on the weekend of December 13th. All right, my friends. As you can see, a mixed bag. What happened is the NASDAQ up. MicroStrategy's, by the way, going into, they announced it, the NASDAQ 100, so that'll get a following there, give it a lot more volatility off of whatever Bitcoin does. But you can see how the markets are moving around through here. Gold down, silver market down, copper down pretty good, platinum. Why? Because China ended its meetings, as I told you. They did not give any real particulars. They're letting little pieces out over the weekend, like the goal's going to be 5% growth. Well, how do you get there? Where's the stimulus packages? What are they? Where's the meat to them? None of that coming forth. So the metal markets are the first thing to get punished, even though gold did see for the first time in 6 months China buying a lot of gold for the central bank. So maybe they're happy with that little bit of a break. The dollar barely unchanged on Friday, and you could see many of the currencies back and forth. Now this is a big week for currencies. We're going to get the Federal Reserve coming out. We're going to get the Bank of England coming out and the Bank of Japan. So we will find out who's doing what. It's widely expected that the Bank of England is going to sit pat, that our bank, the Federal Reserve, will go a quarter point down, and it's a toss-up whatever Mr. Ueda of the Bank of Japan wants to do. It can go either way. If they don't make a move to raise interest rates now, the word is that they'll do it in January, so we'll see what happens there. Still getting some bids in the metals. I am reading reports that Hamas and Israel are getting much closer to a deal now that Syria's gone kaput and Iran has been hurt. I think all the parties that were backed by Iran are now trying to find a way to reach a peace deal, however temporary, with Israel. So what Hamas is trying to do is they're offering up 30 hostages. The initial, what I'm reading, is they're going to allow Israeli troops to stay in the Philadelphia corridor. It would be a 60-day attempt at a ceasefire. We'll see if it bites. But this is better than the fighting that is going on. Notice how much of it is happening also right in front of the President-elect Trump going back into office. So there's a lot to be said for that. Now, in terms of the news that we're going to get coming this week, you start with Monday's news, which is the New York Empire State Manufacturing Survey. That is due to come out at the number they're looking for is 15, which is half of the reading that they got last month. The S&P Global Group will come out with preliminary December manufacturing and service sector PMIs. They think the manufacturing coming up a bit, but needs to cross 50 to show that there's any growth. It's 49.8 is what they're looking for. And the service sector is wobbling. It's coming down from 56.1, which is an expansionary number, to 55.7, but still in expansion areas. Now, as you know, what we try to do on days like the weekend, we go and look at the weekly charts. So if you go back and you look at a monthly chart, which I really don't put a lot of credence in, but some people like them to see where they're at. I don't know how you trade off of them because the risk factors are so big. But it does show the bigger picture, and the picture is still very bullish. And for the month, mid-month, we are up for the month 0.7%. When you take a look at the weekly chart, which more people do trade off of, you are down nearly 0.75 percentage point for the week. When you take a look at weekly charts, you're still in an overall pattern that has been doing a pattern of higher lows, higher highs. Now, for those of you that are students of seasonality, this coming week is the week where you normally start bottoming out as you go into the Christmas time frame, and from there you normally get a rally right into the very beginning of the year. How long it lasts is anybody's guess. It has worked in the past. That's why it's called the Santa Claus Rally. So this break fits right in with it, and something that I talked about in my last report for you. Higher lows, higher highs. Did make a new high through last week, backing off. And if you'll recall in November, right through here, I said, watch out. That's probably the low point for those of you that took that and took advantage of the special report I did on the market. And I was fortunate, okay? Even a broken clock gets right twice a day. And the market did what I said, and yay for me. Now, as the market pulls back here, the big question is, does it get through this low, or does it back off and then start its assault back to the upside, trying to get into the 6180? What's interesting is that you have to build this into your mindset now. Many analysts are not looking for gains anywhere near approaching what this year will offer. I happen to be in that camp very much. You go up like this and then you start reaching points where you can't keep adding on to those gains. Doesn't mean there won't be some stellar companies that do it. There won't mean that there won't be still some trend to be had. But I think you have problems that are developing. I want you all to keep your eye on CREs, the commercial real estate sector. You're going to see that that sector becomes headlines. It's not yet. It's going to become headlines in 2025. There's something like $500 billion in loans that are going to come up. A lot of these loans are underwater. And as much as the regional banks took as what protection they can, there's only so much they can do, and that's one of the reasons that you're seeing the KRE slip back a little bit. So yes, I look for more of a rally, but I'm starting to wonder. As you take a look here with the slow stochastic, as long as the red line doesn't close under 79 on a weekly basis, I think the pros are buying the breaks. When you look at the Dow, same thing. You haven't lost the bullish embedded reading. If you do buy it closing under 79, it probably means price and the 18-week average of closes will try to make a run at each other. Haven't done it. The NASDAQ is fully embedded, back up to the upper Bollinger Band. And guess which market's the weakest? Weakest because you lost the bullish embedded reading, trying to come down. You'd have to go up right now and make new highs, new all-time highs, to negate the bearishness or re-embed. Now you can re-embed this week since it's the first week that it's done it. I've got my doubts it's going to be easy to do. Whenever you close near the lows on a weekly chart for the week and you lost that week the bearish embedded reading, you have to have a pretty large move to get it to go back. It's easier for it to fall a lot more. I'm talking the numbers, which often lead the price. In the 5-year notes, one of the things that's been a headwind for the stock market is we keep adding interest rate yield. It just keeps going up. Both the 5 and the 10-year are still in downtrends. You're back to near the 4.39 level in the 10-year. That's a lot of pressure on the markets. That helps the dollar, which has higher lows and higher highs. So I'm still very much in the bull camp there. When we look at the slow stochastics, did they ever embed? Well, you can see both numbers are over 80 right here. Let's see if I can get it to, it's not going to do it for me, I'm sorry. But it's not quite there. That's my point. So it can react here. If it keeps coming to the upside, look for the 108.15 area. In the 10-year note, let's see, I think I went the wrong way there. Let me come back right through here because we were in the dollar. Yep, I had the finger wrong. In the currency market, lower highs, lower lows. Now, European Central Bank, they only won a quarter point. The market is punishing them. You can see the market is trying to develop an embedded reading. You might head to the 103.60 level, which is the lower Bollinger Band. If you were to take out not this week, but the week before's highs, it would be a sign of getting a reversal in the market and maybe being able to get up here. What else should you be looking at? You should be looking at the potential for this week for a crossover of the 18-week average underneath the green 100. That would be a very bearish setup. Why? Because then you'd have the shortest term average, the 18, under the 100. The 100's already under the 200. It'd be another move to the downside via, call for it at least, via moving averages. Whether it happens, price will tell us. In the Canadian dollar, still have an embedded reading, still falling apart. That's the right way to phrase it. That brings us to the end, where there's disappointment that the bank doesn't yet appear ready to raise interest rates. So we had the rally where the market was thinking that was going to happen. Then we had the disappointment as the market started preparing, and I'm talking comments from Mr. Ueda and other bank governors there, that maybe the market's not ready to do that just yet. I would say if you get over last week, not this past week's action, the week before's, and you can close over 67, 65, you'd finally be in position to get more of a bump in the market. Whether it lasts or not, I can't answer that. Eventually, just raising and raising rates will make the currency come alive. In Bitcoin, still bullish. Fully embedded reading, weekly chart still calling for higher highs until the red line closes under 79. I remain fully bullish on that market. When you look at Brent versus WTI, all of a sudden, the yield near 4 3/4 has given way to nearly the 320 level right now. So that market's really narrowing in between the two. On a weekly basis, the daily charts, by the way, are bullish. The weeklies are still bearish. You'd have to get back up and over now 75.31 in order to turn this market in any which way back out of its downtrend, in my opinion. In WTI, you'd have to get right up here, back up and over, let's call that the 71, probably the 71.50 level. Gasoline, not trending, higher high, lower low, oversold, probably not a place to be right there. So you put it all together, you've got some things to do, and I want you to do one more thing. Take advantage of our free offers. They're here. All you do is you go to our free offer page at iraepstein.com, you select the offer, it'll go into a cart for you. You can select as many as you want, put them in the cart, your name, your email address. If you have a comment for us, give us the comment, hit send. We'll get things out to you right away. I'm Ira. You have yourself a great weekend. Remember, you can click this. You can go there. I'll put, if you will, on some of my videos, you'll even have the icon at the top. You take care. See you on Monday morning.